Good afternoon. Welcome to this special show on the Interim Budget 2024 on the Business Standard website. Union Finance Minister Nirmala Sitharaman presented her sixth budget for the Narendra Modi government today. Coming in a year where the country is headed to the general elections in the next 2 months, there was much expectation and speculation of big stops for the four focus group that the Prime Minister has identified for his government, which are namely the farmer, women, poor, and the youth. Well, surprisingly, apart from the usual platitudes, there was no real benefit that the interim budget extended to these groups. In that sense, the finance minister has stuck to her no spectacular announcement theme with hardly any populist measures in this budget. When FM stuck to the book of what the PM said yesterday, that the interim budget will be a blueprint of intent of his government towards the path of fiscal Bharat by 2047. To discuss the fine print of this interim budget, we have with us Mr. A.K. Bhattacharya, Editorial Director of Business Standard with us. Welcome, A.K.B. to this show.
Thank you, Shailesh.
Thank you. I'll just start with the first question. What would you say is the big, broad message of this interim budget?
Well, if you are looking at a broad message from this budget, I would say that the continuation on the pursuit of fiscal consolidation as an article of faith, in the sense that the government has tried post-COVID to follow a path of fiscal consolidation, which we have seen in the last couple of years from 9.2% in 2020-21 to 6.4% the next year. And in the current year, she is showing a figure of 5.8%, not 5.9%. So clearly, and projecting, she is saying is going to be 5.1%. So it's the broad message is fiscal prudence is an article of faith for this government.
Okay. The focus on capital expenditure stays with the revised estimates for FY25, putting it at 11.1 trillion, which is almost 17% higher than the revised estimates for FY24. How do you look at this whole capital expenditure focus staying?
Well, I think you have to look at the budget numbers a little more closely. First of all, projecting a lower fiscal deficit of 5.1% is riding on controlling expenditure and relying on higher revenues. Now, the question on capital expenditure is that the government in the current year has actually not been able to spend its entire money. In a sense that it is budgeted for 10 lakh crore, it could only spend 9.5 lakh crore. So you take that figure as the base, she's projecting an increase of around 17%. Now, remember, in 23-24, the current year, she's already achieved a very good growth rate on capital expenditure. So I think the capacity of the system also has to be seen, whether it can absorb so much more in the next year. And of course, the private sector is going to come in, so you don't need to worry about capital expenditure growth slowing down.
Okay. It's interesting that you mentioned that she is riding on higher revenue growth. But if you look at the FY25, the interim budget projections for nominal growth in GDP, it's only 10.5%. And the tax growth is projected at 11.9. That makes it a buoyancy of merely 1.2 times compared to 1.5, 1.6 for the first fiscal year that is ending in March. Do you think Finance Minister is again being conservative and hugely underestimating the tax numbers?
As always, this finance minister in particular has been very conservative with her tax numbers, revenue numbers. If you look at even the current year's non-tax revenue numbers, she has far outstripped what she had actually projected. Non-tax revenue growth has actually gone up by almost 24% from what she had projected. Now, in the tax revenue numbers also, she's showing a tax revenue number which is higher than what she had projected in the budget estimate. So I think is good husbanding of resources and conservative management on the taxation revenue front.
But the stock market reaction has been a bit of a surprise. It has remained unmoved by this interim budget. What do you think is the reason? Did the market already bake in all that there won't be any changes in tax policy and the policy direction will remain the same? Or Or
well, I think the stock market was expecting some taxation changes, probably on the capital gains front, particularly, and the fact that the finance minister has stuck to the convention of not coming out with any new tax rates or new schemes in an interim budget, for which she deserves full compliments, because after all, an interim budget is an interim budget. And an elected government for 5 years should not produce more than 5 budgets. And she has deferred everything to the next budget, which should come in July after the elections.
Okay. How do you read the write-off to almost 1 crore or 10 million individual taxpayers for small disputed amounts from 10,000 to 25,000? How do you read that?
This is part of the overall exercise to improve ease of living or ease of doing business. And also, taxpayer services need to improve. If you look at the amount, the income tax amounts under dispute, which are more than 10 years, you will look at the finance ministry documents, tell you that total amount is around 22,000 crore has been disputed. Now, if 22,000 crore rupees has been disputed, which is more than 10 years, I would imagine that if 10 million people, individual taxpayers, will benefit from this scheme. So this will be a very good tax relief, but not without cutting rates. So it's a very interesting, intelligent, and also I would say a clever way of doing a nice turn to the tax-paying public for their good conduct in the past.
So you're saying the tax forgone is 22,000 crore because of this measure?
The taxpayer, if you look at the tax amount which is under dispute, dispute is more than 10 years. And remember, the cutoff date for her announcement is 2014-15.
Yes.
So nobody who is dispute 13-14, so it's 10 years.
Yeah.
So anybody who is a dispute after 13-14 is not going to get the benefit. Okay. Anybody more than 10 years is going to get the benefit. Okay. And if you look at the finance ministry document number, it comes that 22,000 crore is the amount disputed. So I would imagine that almost 22,000 crore is going to be the benefit for people, which will be a kind of an effective benefit for those who have disputed these amounts.
Yeah, among the very few new measures that the finance minister announced is the 1 lakh crore corpus that she has set up for the R&D. Almost nil interest rates with a very long gestation period of loans, 50 years. How do you look at it?
This, as you must have also noticed, that she talked about, Jai Jawan, Jai Kisan, Jai Vigyan, Jai Anusandhan. So I think it's a good move because if you want to ride the new wave of technology, artificial intelligence, and other digital ecosystem, you need to spend a lot of money in research, not just in the government sector. In India, the government sector research is pretty okay. But where we are lacking is encouraging more research in the private sector. And I think this scheme is going to get more private sector guys into research. Since we are talking about large schemes and new ideas, there are two areas of concern that I see in this budget. One is I see the defense outlay has stayed the same for next year.
6.2 lakh crore.
Yeah, is exactly the same as what we are spending now. Yes. And I think at a time when the global situation is such, and defense preparedness is very important, that defense outlay probably could have reflected the normal inflationary impact on the budgeting. So why it has not happened is a bit of a surprise to me. And the second surprise to me is this, that if you look at the way the subsidies have been managed, you are providing probably no increase in the fuel sector, the petroleum sector. So there is an assumption that the petroleum sector will remain what it has been this year, although this year you have to provide for more petroleum subsidy than what you had budgeted for. So is there an underestimation of the subsidy bill? Because on paper you have shown the subsidy bill to have come down to around 1.3% of GDP in the next year. Now, the subsidy bill to me looks to me a little bit of an underestimation. So, defense and subsidies are two areas which probably need to be looked at a little more closely.
Okay. In terms of infrastructure focus, apart from the capex 11.1 lakh crore that she announced, there was announcement of 20 million new houses under PM Awas Yojana Grameen, and there was 3 corridors that she announced for railways. One is a freight corridor, which the energy, minerals, and cement. One is a port connectivity, and another is a high-speed traffic corridor. How do you look at these infrastructure?
You are right, because although she made these announcements separately, but I would see that the capex increase will actually result in these corridor projects, and even energy, minerals, cement, and Gati Shakti. This amount of 11.11 lakh crore will go into funding these schemes.
Oh. But do you think all this government push for spends in infrastructure would finally enable the environment for private sector capex to finally kick in?
I think having seen the government capex to go up from about 4 lakh crore 2 years ago to 11.5 or 11.1 lakh crore next year. And also already you have seen that the private sector capacity utilization levels are going up to almost around 72-73%. Now, I would imagine that the private sector guys will start coming in. And there's also a very interesting, information in this budget, which is about how the government is looking at its own production-linked incentive scheme.
Yes.
If you look at the PLI scheme, which is also encourages investment, if you remember, because with more the PLI, then the private investments comes in. Now, in the PLI incentive allocation for next year has seen very marginal increase. Almost around 10,000 crore is being provided for next year compared to around 7,400 crore in the current year. Yeah. So that, to my mind, shows that the government needs to spend more money under its own capex program, because the private sector incentives are not seeing a huge increase next year even. So therefore, on the investment side, from the private sector investment side, we have to see how these policies actually fare.
Okay. Coming back to keeping with the fiscal consolidation roadmap, the Modi government has been moving very credibly in this fiscal consolidation path, and especially this finance minister for the last 6 budgets. Do you think the country has built up a strong case for global rating agencies to revisit its lowest investment grade rating?
Well, I think there is discussion going on between the government and these global rating agencies. And on all the parameters of Fiscal Responsibility and Budget Management Act, you will notice that one parameter which the global rating agencies will look at very closely is the overall public debt. Now, the public debt has come down a little bit. In this budget, it is coming down to 52%. But if you take the entire thing, it is coming down to 56% of GDP for the central government. Now, I think the rating agency will also look at those parameters, because under own FRBM Act, the central government's debt to GDP should come down to 40%. So those are the issues that the rating agency will also look at. And now that the government will go and access the global bond market also from June onwards, one has to see how rating agencies look at these various parameters.
Interesting that you mentioned the whole thing on economy. The finance minister also promised to come out with a white paper on the economy, which she says they'll compare decadal state of the economy after 2014 and pre-2014. Do you see this as an exercise in politicking, given that invariably this would be the comparisons of the Modi government vis-a-vis the 10 years of the UPA government?
I think this government wants to create its own legacy and to build and compare its own performance on economic management front with what the previous government, the UPA, did for 10 years is something that this government wants to establish. And as you rightly pointed out, this is going to be an exercise with a political intent coming before the elections. and a white paper as a document will probably give it a little more relevance, and people will start talking about it. So the government's political intent is quite obvious here.
Okay. There's an all-round agreement that this is almost not a political budget in an election year. But as far as you're concerned, what is your biggest surprise and biggest disappointment in this budget?
Well, the biggest surprise in this budget is that she chose not to provide adequately increased amounts to many of the welfare schemes that the government holds very dear to. Like the Prime Minister Kisan scheme has got the same amount of money. But if you look at the Narega, has got a little more for the current year only, but not for the next year.
86,000 crore?
Yeah, that's for the current year. Yeah. And for next year is the same amount.
RE
same amount. So and even if you look at the many other schemes, there is a very, very token increase that has been given for next year. Okay. And as a matter of fact, even when we are heading into the election season, if you look at the Ministry of Law account, you see the amount provided for the Election Commission has actually been very, very nominal. The current year is lower.
RE is lower than the...
No, the RE for the current year is higher by around 73 crore or so. Yeah. But for next year it is lower. So which means that the next year's elections will probably be budgeted for in the current year, or whether I do not know what it means for the election schedule.
Yeah. Interesting. Yeah. Thanks, AKB, for joining us for this special show. Thank you, viewers, for watching us. For more analysis and fine print of the budget, keep visiting the Business Standard website. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.